Welcome to the ROI Masterclass, the podcast where vision meets strategy and bold moves create measurable results. I'm Liat Siegel, interior designer and ROI strategist with 17 years of experience. I help businesses transform properties and ideas into high-performing assets. This show is specifically for real estate investors, hospitality operators, and boutique developers who aren't afraid to take risks, challenge the status quo, and demand a return on every decision they make. Each and every week, we talk with innovators and leaders across industries about the strategies and the insights and really all the unconventional thinking that turns potential into profit every single time. If you believe that smart design, decisive leadership, and strategic risk are the keys to real ROI, you're in the exact right place. Let's dive in. Today's guest is Samir Kuckreja, a hospitality consultant with more than 35 years in the industry. He studied hotel and restaurant management at Cornell and has worked across hotels, restaurants, and food businesses, helping companies improve profitability and maximize return on capital. What makes Samir's perspective especially interesting is that he operates in India, one of the fastest growing hospitality markets in the world. Today, we're talking about hospitality investment opportunities, how to elevate ROI in restaurants and hotels, and what investors around the world can learn from what's happening in India. Samir, thank you so much for joining us. What an honor, all the way from India, to have you. We've interviewed a lot of people in the US, maybe just outside the US as well, but nobody ever in India, and your perspective is going to be spot on for what's happening there and perhaps what our investors in the United States can learn, so maybe they would like to also invest in India.
Thank you. Pleasure to be on your podcast.
Amazing. Tell us a little bit about your background and why you are so vested in the hospitality industry.
I actually kind of joined the hospitality industry at the age of 40. I worked in a Indian QSR restaurant. I washed dishes and I bussed tables. Then I did another job where I worked in the kitchen. So I kind of worked my way out at restaurants and hotels. So I liked what I saw and liked what I was doing. I also, at the age of 16, I was in a boarding school called the Doon School in Dehradun, one of the top boarding schools in the country. And I ran the school tuck shop, which was a kind of cafeteria for the school children. So I ran my first P&L at 16, turned it around, did new menu dishes, made it profitable. It was loss making. And from then on, I did, summer jobs, part-time work, came to Cornell, which was a wonderful experience, the best hotel school in the world, still continues to hold that ranking. Very interesting. It was a very practical degree. I felt the hotel degree. A lot of courses at the Statler Hotel, which is right next to the school. A lot of courses with industry practitioners. A lot of visits to New York City. And a very international student cohort, which was a plus point because today I have friends from the hotel school who live across the world. Worked a couple of years in the US, a year in Philadelphia at the Four Seasons, a year in North Carolina, Greensboro, with a Cornell Hotel alumni, American, who ran a chain of bar and grills. And came back to India. I've been back in India 34 years. Been working mostly in New Delhi, which is the capital, a couple of years in Mumbai. In both Indian and international companies, I did a almost 4-year stint at Yum Restaurants, long time back when they were just setting up Pizza Hut in India. And I was handling business development and franchising for India, Sri Lanka. I set up the business in Bangladesh. And I helped scale up Pizza Hut 17 to almost 85. This was again about 25 years ago. Looking at new cities, new locations, new franchisees. And then I worked a couple of years in Bombay with another Cornell Hotel School alumni who ran interesting Mars hotels and restaurants, which had boutique hotels, a live music concept called Not Just Jazz by the Bay, a premium cake shop, a bakery concept. And so diverse concepts again there helped expand it from one city to 2 other cities and grew the business. My last kind of full-time role was CEO of Nirula's. Nirula's was at that stage India's largest domestic QSR chain, bigger and larger than, that in 20 years ago than the foreign MNC chains. It did burgers, pizzas, Indian QSR, and most famous for its ice creams. This was actually a business started by my grandfather in the 30s. Grandfather and granduncle, run then subsequently by my uncles. I actually worked an initial stint there when I first came back from Cornell. When I joined as the CEO of the family, I actually sold out to a private equity fund, Navis Capital based out of KL. And I had a small stake in the business. And I again scaled up the business from 35 restaurants to 85, 2 cities to 8 cities. Also entered a lot of new retail formats. So the airports were just getting modernized. We created a format for, the airport, did very successful. We created a small format for the Delhi Metro, which was just about getting going. And when I exited that business 14 years ago, then I set up my consulting company. I've run it now for it'll be 14 years later this year. We do various things, but as relevant to the topic you're talking about, we do M&A work both on the buy side and sell side. So we have advised PE funds, VC funds, family offices, some HNIs on investments, and in the hospitality space. We also actually do fundraising and take fundraising mandates and run fundraising mandates like an investment banker. So both sides. The other thing of my kind of deep connect with the industry in India was the president of the National Restaurant Association of India, which is the equivalent to the NRA in the US, which is the very strong body there. This is very strong. So I was president for 5 years and trustee for 5. That's helping with advocacy, improving ease of doing business, getting the industry together. A lot of interesting things for the industry. I am also involved in the tourism and Hospitality Skill Council as a governing body member. Here we do skilling at the entry level. So entry level courses across, hotels, travel, restaurants, tour operators. And these are 3-month short-term courses to train people who can then work in jobs. And we skill about 250,000 people a year. And with the Tasanai Hospitality, my company, besides the M&A work, we also do executive search. We do growth strategy. We also advise brands on entering India. We've done work for Godiva Chocolates on a couple of occasions. And so we do a kind of gamut of work across the hospitality space.
What a resume. I mean, that's several lifetimes of work, and especially having lived and worked and learned in the US. What do you see as the major difference between hospitality in the US versus hospitality in India?
So I think, India, we have and I think this works for hotels and restaurants. We have this service culture. We have a culture where if a guest comes to your house, you will look after them. They're considered a guest. You will give them, extensive choice of food to eat, beverages. So we have this thing called Atithi Devo, which is we have to look after guests, anyone who's a guest. And because the cost of labor is still significantly cheaper here than the US, so I think the service standards in Indian hotels is perhaps among, I'd say, comparable to anywhere in the world. So you have very high service standards. You have also a very different dimension to hotels here, because you have hotels in spiritually focused, wellness focused, and you have hotels in adventure. There's a whole locations where adventure focused, and then you just have, of course, business and leisure. So you have, I think, a wide gamut, and you have a lot of hotels in different segments. Of course, there is a shortage. There's a shortage of quality hotel rooms in all, from budget, economy, mid-market to upscale to premium. And therefore, for the last few years, especially at peak periods and peak seasons, hotel rates, the room rates are relatively gone up a lot. But I think we have all the top American hotel chains are in India with fairly expansive businesses. Most of them run through the franchise model. Some do management contracts. But interestingly, Hyatt and Radisson, for the first time after being in India for 25 or 30 years, have both announced their first joint ventures where they're actually investing in properties, which is unusual for them because generally these brands only operate to a no investment model. On the restaurant side, again, I think pretty much all the top US chains are in the country and have entered. They started coming in 95, so it's been a while. People are still coming over the last 5 years. Chains have come in from Tim Horton from Canada has come recently.
Wow. I'm from Canada, so that's a name I haven't heard in a long time.
Yeah. So, and again, I think what's driving both hotels and restaurants in India is it's this real surge in domestic tourism. So in terms of domestic tourism, what happened in COVID, and I think this, I'm sure it happened in many other countries, but Indians couldn't travel out for a couple of years, and Indians just started traveling within India. There was not much else to do, right? You were allowed to travel, especially by road initially. And the domestic tourism in 2019 was about 1,853 million. This in 2024 is increased to 2,948. So in 5 years, it's grown 59%. That's really driving, I think, a hotel, surge in building of hotels, signing of hotels, rates at hotels. What is driving in restaurants is the booming, increasing large middle class, a lot more of dual income households. So therefore a larger disposable income to spend and less full-time help at home. So a lot of the younger generation has just part-time help in their houses. They won't have full-time help, but say my generation would. So ordering in and eating out then become, kind of par for the course. And again, here with the food delivery, we have two aggregators, Indian brands, but at a global scale, Zomato and Swiggy. They're both in the top 10 globally in terms of their size. They have really, they've got funded, they're both now listed, and they have really developed the delivery ecosystem significantly in terms of customer acquisition, customer frequency. So both restaurant dine-in and delivery are kind of on a very high trajectory of growth. So I think that's one of the factors which are driving the consumption, the boom, as they say.
Would you say the economy there is better than what you're hearing it is here? Because I think that from many of my conversations with investors and developers, a lot is kind of on hold right now in the US, and the middle class is getting clobbered by taxes and they're just squeezed from every angle. So it's refreshing to hear that the middle class there is thriving more. And I'm just curious, what do you think leads to more of this boom in India and the hospitality boom? And can we learn something about what the conditions need to be here in the US for that to happen again here?
I think, one is that the Indian economy is currently growing at about 7.5%. It's the fastest growing economy in the world, has been for the last 2 years.
Wow.
Yeah. So for the last 2 years, it's been the fastest in terms of overall GDP size. We're the fourth in the world now. And that, of course, is fueling at the base. That's what's fueling it. B, I think that I have to laugh and say that, especially since the tariff drama started for us, which was in August, with an incremental 50% tariff imposed, the government has unveiled a series of economic reforms on the GS taxation, which is equal to your VAT. It's called GST here, goods and service tax. Streamlining, reduction. They've done something around the income tax in the last 12 months. So they've kind of trying to free up by reducing taxes, more hands in the cash more cash, more consumption. And that's leading to increased spending. So for instance, the purchase of automobiles in this, we run on an April to March financial year, I think is a record high this year because they had 6 months with lower taxes. So, we don't do the following, which a lot of Western countries do. We don't tax our super rich separately or extra. There's a tax rate at the top. The maximum tax rate for me and for others is 33%. But there's no super rich tax that if you earn over X, you will pay X. So there's a whole, I think, focus over the last, let's say, 15 years, which is to just increase the tax net by making kind of very easy in terms of filing and also by, I'd say, reducing any kind of harassment, which earlier was fairly common in India because of the bureaucracy and, the using tools like this to harass. I would say that those are some of the factors. And of course, the current government has incentivized making in India. So manufacturing in India across sectors. And they have special schemes they announce every 2 years. They pay out incentives, financial incentives. There is also competition between state governments. So when Microsoft is looking at setting up a data center, they will have 3-4 states in India which pitch to Microsoft. Come and set up in our state. We will give you land at X concessional rate. We will give you specific tax benefits because they all know it creates employment. I think a lot of very proactive states where the leadership is visiting the US, visiting other countries, pitching their states for investments, whether it's manufacturing or service-led. So I think all these factors, if you look at all these factors together, that's what's helping. And I don't see that much of this talk or this kind of, happening, especially in the US currently or even in Europe. I don't see this. And maybe a difference because I don't think we're a developing economy, but we are still kind of between developing and developed, versus, most of Europe and the US, which are developed, super developed economies.
What about the investment opportunities? Are you talking about companies coming over to India to invest? Why are these international brands coming to India specifically? Is it because the labor costs are that much lower? And where should investors look to invest in India in the hospitality industry?
I think there's investment. I'll share some data points. So what we call foreign direct investment, we call in India, touched a high of $135 billion last year, 25 calendar year. As far as consumer brands, 30 new international consumer brands. This is across segments, food and beverage, footwear, entered India last year. There's also this consumer demand for fashion, it's for lifestyle, it's for food and beverage, beauty. So you have European brands and American brands, both, I'd say, largely. And you have Japanese, you have Uniqlo, which is a very successful brand in India. We're also, consumer spending is, predicted to increase to $4.3 trillion by 2030, which will be doubling from the 24 figure. So,
That's just mind blowing.
Yeah. So, there's all these every year, it's a new customers coming into the middle class. Some will start in terms of food and beverage perspective, just start by going to McDonald's and getting the soft serve, like going to Indian QSR and eating one dish, right? And spending perhaps less than $1, 50 cents. But they'll once they get exposed and their family gets exposed to that experience, their consumers, their stays, this whole, and there is also an increasing availability of easy credit cards through, buy now, pay later, new startups. There's a lot of opportunity to take credit for buying a house, buying a car, for personal spending, right? So I think that also is fueling this consumption growth. So as far as the investment opportunity goes, I think today, if you're looking at entering India, both in hotels or restaurants, I think you have to look at it very carefully. Maybe you have to get a very good advisor. Doesn't paint rosy picture. When my company got taken on by Godiva to be their consultant, it was over a big six firm. And the reason was, a friend of the Godiva regional CEOs was the CEO of Pizza Hut in India. And he told him, he said, you're wasting your time. These firms will not give you the true picture. This is the guy who knows the ground reality. And interestingly, when Godiva first came to me in 2016, my advice was don't come. India's not ready for luxury 10 years ago. When they came back in 2018-19, the market had evolved and changed and there were more luxury brands and they also wanted to do their, premium cafes. So then the advice was, yes, do it, but do it through a franchise model. To get the right advice, it is becoming crowded in the sense there are lots of brands. And then, anyone coming in today has to compete. If you're a hotel, you have to compete with Marriott, Hilton, Hyatt, Radisson, everyone's here, right? With multiple brands, multiple properties. So you've got to make sure that there's demand for your specific property in that segment. You have to make sure you have the right partner, assuming you're coming in with the partner. In the F&B restaurant space, again, you have to really evaluate the segment you're in, who's the Indian competitors, who are the international competitors, and where the gaps are. And there are still gaps. There's still opportunities. But I think in the last, 5-7 years, a lot of expansion has happened. People have come. So I think they're now kind of focused opportunities. It's not a blanket opportunity. I wouldn't say that. Another way to invest in India is just if you're investors, and I don't know if you're listening community. So there are lots of angel networks. If you want to invest on the angel, kind of get in through just trying. There are also a lot of private equity funds and venture capital funds, US based, US headquartered, which have set up funds in India. Another way is entering and investing through a fund or through an angel network, right? Without directly, where someone else is doing the due diligence and the hard work and the analysis. So that would be my advice to the individuals or even family offices, right? If the family offices invest in a VC fund, invest in a PE fund, both the Indian PE funds and VC funds take investments from across the world. There are also US-based funds which have set up India or South Asia-based investments. So I think those would be the opportunities that I would talk about.
You said that there's not a blanket opportunity right now and that there's specific gaps in the market. What can you share with our audience about these specific gaps that would be great opportunities if they wanted to invest now? So
I think in the hotel space, I think there's still opportunity in high-end luxury, the Ritz-Carlton, Four Seasons.
Boutique? Also,
I think boutique. So the big boys are here. There's an Indian chain which specializes in that called the Oberoi. They've just opened something outside Jaipur, and this is it baffled me also. There are 4 rooms. It can accommodate 8 people. It's spread over 50 acres. It's an old palace, and you can only do it if you buy out the property at what I felt was an astronomical price, and it's sold out for months. Right, so I think boutique, exclusive, high end. There's still opportunity. This chain called the Aman, it's a hotel chain based out of Asia. Hotel, very boutique, very high. And they have 2-3 properties. I think each is 10 to 15 keys. That's it.
That's what I feel is the next biggest opportunity from everything that I'm seeing in the market across the board. And I think the reason is because of the experiential side of things. People are wanting a unique stay and they're willing to pay extra for that, especially coming to India for wellness and for the spirituality side of things. I think that India, hands down, has such a pull for travelers to come there.
So I think, that's one opportunity. I think what's an opportunity in India and hotels is mid-market. So there's a lot of stuff in the budget section. There is stuff at, kind of business luxury, business hotels. But mid-market, which in Indian terms is about $50, 50 to 60 USD a night. And remember, when I'm quoting these figures, while the actual based on the exchange rate, it's not based on purchasing power parity. It's, but there's opportunity in the mid-market. There are chains, there's Indian chains, there's some of the international chains of brands. But I think there's still a gap there.
In the mid-market.
Yeah, mid-market and upper. As far as restaurants go, one gap is, of course, what an international chain can't do is Indian, in the spectrum of Indian regional food, Indian QSR. I think there's still a market available out for gelato and ice cream, good gelato and ice cream brands. There are international brands, there are Indian brands, but I think there's an opportunity there. There's also a growing segment in terms of bakery. So here we have some international chains, but largely Indian chains here, which have grown and done well. So I think there's interesting opportunity in bakery, both in I'd say mid-market and premium. There's also a couple of just luxury bakery chains. So I think the space for just typical Western QSR is a bit crowded. I wouldn't advise anyone to come in that space today. And again, I think anything which is so people in India in the restaurant eating out space are looking at what's doing well, unusual eating experiences. So there's a restaurant opened by a celebrity chef, which is a 5-hour drive from New Delhi. It's up in the hills. He has 20 seats in his restaurant. He's got a 4-month wait list. It's by Indian standards, it's very expensive. It's considered ultra, like a occasion. And he's doing farm to fork. So he's local produce. He's growing. He changes his menu all the time. So I think anyone who's doing interesting experiential led food. The other trend, the last trend in food is there's an increasing, and I think it's going to increase, is health based. So there are vegan restaurants, but more focused. They're pure vegetarian restaurants. They're vegan restaurants, but all these are still small. And I think there's an opportunity to grow both the vegetarian and the vegan side.
Yes, absolutely. I just ate at a vegan restaurant yesterday and I was so happy. It was amazing. And I think that the experiential side of that restaurant, I've eaten in a lot of different places and had a lot of different experiences, but the whole novelty, I think, of the food and the way that it was presented and the ambiance of everything was really next level. And I love the idea of looking at what the gap is in the market and, creating kind of that blue ocean rather than the shark infested waters of the red ocean, and looking at reviews and saying, okay, this is what is missing, or this is what people are craving and wanting more of that's different and standing out, so that you can charge more for that experience and you can, be profitable and then create several locations for that model.
I think a lot of experience-led concepts, both in hotels and restaurants, experience-led. So there's a huge surge in game park, in stays, visits around various game parks. And the game parks, across various states. There's a lot of wildlife to see in India. But there's an increasing number of people going, both Indian and foreign, wanting not just the safari, wanting, nature walks and other experiences, yoga, healthy eating. So I think, of course, globally, this trend of wellness and health and looking inward is post-COVID, really. It's only a 4 or 5 year old trend.
Yes, I agree. 1,000%. I think after COVID, everybody kind of realized just how important health, connection, well-being, and just living life out to its fullest is. And I think that we're going to see that more. We're already seeing the effects of that, but I think we're going to see that more and more, every year. And it's specifically, you can see that already in India, where kind of the stuckness, the chains of the economic chains have been kind of lifted, and everybody's able to kind of invest and grow. Whereas here in the US, the economics are kind of sitting heavy on everyone's ability to invest and to grow. And so I believe once that's lifted, then we're going to see more innovation and more investment. But right now, with what you're sharing in terms of what's happening in India, I think it's a great investment opportunity. And I'm curious why right now there's that low supply. There's a lot of demand, but there's low supply in terms of the hotels. And you mentioned that really go up. Is that going to be solved? Why is that happening? And is that going to be solved soon?
I think it will be solved in the next 3 years, because there's a lot of committed capacity, greenfield, brownfield projects signed, which are coming in all these cities where this shortage is there, leading to, price surges. So it's just that this growth has only happened post-COVID. And this is also in a lot of the top big cities where, land is not so easily available for hotels. So I think that will get solved in the next 2 to 3 years. But again, huge opportunity for hotels, and there's already some growth happening. In India, we have something called Metro, which is the tier 1, the top 6 cities, the large cities. And then we have 2, 3, and 4. And the definition of these is based on population and some other parameters. So there's tier 3 and 4, which smaller towns still, very little presence of hotels and restaurants. So I think there's an opportunity for both in these. There is some presence, but there's, I think, tremendous opportunity of growth here.
And what specifically it would be also the same experiential aspect?
Tier 3 and 4, some of it would just be, they could be business destinations, they could be religious mid-market. Yeah. I think the experiential destinations are either those are in the hills, or kind of, experiential locations. So they could be in game parks. It could be, or just wherever there are a lot of the natural wellness top properties are in the hilly parts of north. A lot of them are north. There's also in the south, in Kerala, these Ayurvedic spas and detox centers and
Maybe I'll come there soon. That's calling my name. So can you name the specific areas that you think would be the next best investment places to invest in India?
One is that in terms of hotels, I think there's still an opportunity in what I call the state capitals, tier 1 cities, not the metros, not the major metros. Across the country, there are probably about 28 state capitals. Most of them have a shortage. They have some brands, they have some rooms, but they don't have enough. So I think some of the cities in terms of names, Indore, Coimbatore, Jaipur, Lucknow, Visakhapatnam, Chandigarh, these are across India. These classify as tier 2 cities, which are experiencing themselves in growth, have unmet demand, both for hotels and restaurants. Some of the top tier 3 cities, Mysore, Dehradun, which is up in the hills, Ayodhya, which is a religious destination, Udaipur in Rajasthan, which is a tourist destination. So it's a mix of tourist, religious hills in just this tier 3 list. Tier 2 is an interesting opportunity. Tier 3 is larger, and then there's tier 4, which is also an opportunity. And I have to say, give credit to, some of the American, both hotel and restaurant companies, which have kind of come in, and even brands like Domino's and KFC have kind of penetrated into tier 3 and 4 locations and hotels, which have opened in small towns, like 2-3 cities, So it's not that it's not there, but there's not enough. And there's unmet demand. Also, just remember in tier 3 and 4 cities, the only entertainment, one of the main forms of entertainment for people in the city is going, if there's a mall, there'll be one mall in the city, if at all, who's going out to eat. And hotels become a kind of social hub in these cities for people to meet, hang out, have their, social corporate events. Restaurants are a place to go to, right? So it's part of entertainment because you'll have probably one mall with one Cineplex in the city, in a small town like that.
And also family is probably a very big emphasis in your culture, right?
It is.
We share a lot of the same ROI frameworks, and you spoke to me about a new concept that I haven't heard, at least the terminology for, but we have it within our own framework, which is return on capital employed.
That's right. KE.
Can you tell us a little bit more about what that framework means to you and how you deploy it in your world?
So yeah, I've always looked at, from when I was running companies to now when I'm helping others, advising others, is looking at, I'm very clear that, unless you're in a not-for-profit venture initiative, you're deploying a lot of time, effort and capital, and you have to get a return on that capital. So return on capital is simply calculation from the EBITDA, EBITDA of the cash flow coming out of the business. How many years would it take for the capital that was invested in the business to be recovered, right? When you get a return on capital, which, I think in the F&B space, it for small formats as, ice cream kiosks, gelaterias can be, and also express formats could be as less as 1 to 2 years. Cloud kitchens also fall in that same, they're doing well. Restaurants is generally 3 to 4 years.
What's the typical or best return window, rate of return on hospitality, restaurants?
It calculated as a percentage. You calculate it in number of years. So number of years to recover the capital that was deployed. Then the profit, the EBITDA that you get subsequently is all free cash flow, right? It only needs to be used for refurbishment, so you've got your capital back. There are different methods and ways. I think hoteliers calculate it a slightly different way. In the restaurant world, it's a very simple calculation of, total EBITDA you earn, how many years, and you say your return on your investment, capital deployed. So I think that's the way I look at it. And I think more and more people are looking at it quite strictly at that way. And also to learn, because when you're looking at a new hotel property or a new restaurant, you're forecasting with your own company experience, your own brand experience, with the help of a consultant like me, perhaps. Forecast. The main thing that you're forecasting is demand. What will the occupancy be? What will the ARR be? What will the number of covers be? What will the average per check? And you're forecasting demand, and your costs are not that difficult to forecast in terms of how it grows over the years. I also always look at revisiting it a year after the operation has worked. So you had a forecast, you had a feasibility. You must look at it 1 year later to see what did you actually generate, and to learn from any variances that you find. What was your demand estimation wrong? Was something on the cost side wrong? So it's also not only the discipline of doing it before deciding to allocate capital, but visiting it at a 1 year period, 2 year period to see that and to make cost corrections if required and to make sure that you get that return on capital.
Do you find that hospitalians map the upgrades, specifically the construction, the design, and the actual materials purchased for the property to the uplift and to return on investment? Do you think that they underwrite for that?
Underwrite in what sense?
Meaning that they forecast how the specific capital deployed will map to what return on investment, so that I know I'm spending on this and this is going to have, I'm going to be able to charge.
So you're spending a certain aspect, a certain type of interior and finish, and therefore the finished product you'll be able to charge an X, dollar rate for the room.
Many places I've seen have also overspent or over-designed. And so there's a need to also pull back the design to ensure that we're maximizing return on investment and that we're getting that money back within a shorter, quicker time.
I'm sure in the US it's the same, but in Indian rooms, hotels, they look at the cost per room, total project cost, and that's not typically the cost going into a room, but they allocate. And I actually think the way to do it is actually a cost per room of just what goes into the room, and then have cost of public areas, infrastructure, F&B, banqueting, all separately. Most hotels, just 200 keys is what we spent. This is the cost per room. And that varies. So I think there's an increasing awareness about, and I think there's an increasing from a customer perspective, both in hotels and restaurants. And the experience of staying in a hotel or eating out, a large part of a good rating on that experience is the ambience of the restaurant largely comes from the interiors. The ambience of a hotel largely comes from the way the hotel is designed, the comfort of the room. So I think the customers are demanding it. The customers are willing to pay a premium for what they call premium design. Customers are willing to pay a premium average per check at a premium, kind of well-designed, high-end design restaurant. So I think they're looking at it. But I also think I'm seeing an increasing awareness of looking at durability of materials, right, and finishes. So both from just the ability of repair and maintenance, right? And given that India it's dusty, the conditions in the country, and depending on which city where you are. So I think durability of materials is another new aspect which is being looked at.
Absolutely. Because ultimately the PIPs don't have to happen as frequently as they would with quality materials that are durable, right?
Yeah.
And if you don't have that durability, then the PIP needs to happen sooner. And that goes back to cash flow and return on like how quickly you can return. And also I find that there's not enough granular understanding of, yes, maybe there's more of an umbrella budget, cost per room or just overall on the project, but there needs to be a more micro analysis of what specific materials lead to what kind of uplift and return so that there's not overspending on materials. I think right now, for the most part, there's no kind of formula. This is what we're building out, but there's no formula that exists right now to figure out without what materials and what design will lead to what improvement, what return on investment. And right now, I think it's more of a gamble, like a guessing game of, will this work or will this not work? And it needs to be like, I love that you have within your consultancy, you have frameworks for ROI. Yeah.
I do. I have, specific, I'd say, proprietary formats which I've created over my decades of experience of how to evaluate a new restaurant or retail look, how to forecast it, evaluate it, also for hotels separately, like a whole hotel feasibility, right?
Walk us through what that looks like.
The hotel feasibility, I'll walk you through with word conversation with a real estate company in Bangalore. First hotel venture, 8 acres, a couple of hours out of the city in a kind of tourist destination where there's, temple, kind of a heritage temple close by. So we are saying that we'll evaluate the supply, the competition. We'll evaluate the profile of the customer firstly. We evaluate what needs to go in there. And we will do a, feasibility, which when we're looking at the CapEx, based on understanding the owners, kind of what they would like to do in terms of positioning. But we're going to detail out CapEx the way I said. Rooms, common areas, infrastructure, F&B, conference, and others, right? So that you actually you look at how that figure, instead of just a dollar figure per room, right, which doesn't show you any detail. And we will, on a scientific basis, based on what competition is doing, and there's not much immediately, so it's within a couple of hours, forecast demand and then give a return on capital employed. So yeah, that it's I think far more detailed approach than is traditionally done.
What is traditionally done?
Traditionally done is it, economy, premium, upscale, 3-4 categories. There's a rupee figure per room, which is the benchmark in that category. If you go to a lot of architects, that's all you'll get, right? So your project will cost this. And from the demand side, people may not use a consultant. They'll estimate their own demand. That's why a lot of stuff goes wrong, because you overestimate demand or you haven't factored in adequate costs. Both sides.
Correct. Having that detail overview. Yeah. I mean, that's before we start any design project. We don't look at mood boards. We don't look at how it's going to look. We look at what is the demand, right? What is the gap in the market? Doing an analysis on projection mapping on what their uplift could potentially be and how quickly they can make that return on investment.
Yeah, I agree. You should come and do projects in India.
Let's do it. I'm totally game. I think that, it's interesting, really interesting. You talk about your framework and how it differs from what people are normally doing, because I think that we have our road method, return on environmental design. I think that fits perfectly into what you're talking here about how you make the analysis first and foremost to make sure that they're going to be profitable, because it doesn't even make sense to open your doors. It doesn't make sense to spend $1 before you have those exact numbers.
Absolutely. Yeah. But unfortunately, I'm sure this happens in the US. You have advisors or consultants who are just in to make the consulting fee and don't care on the outcome. And B, there are people who think they don't need the advice, even though they've never done it in the industry. They just they'll say they're real estate. How we know real estate, so we can run a hotel, right? Those are the ones where largely, some might make it, but a lot of them would just, not work. Right. But I think, I know that the closure rates are highest, probably in restaurant space. I know it's very high in the US, but it's creeping up here. So in India, 40% of restaurants which open close within a year. The number in the US is about 75 to 80%.
Wow. I did not know that stat.
Yes.
I mean, we did market research on hotels maybe about 7-8 years ago. And it was staggering to me I spoke to many hotel operators. It was staggering to me how many were about to close their doors because they didn't invest in understanding what the market wanted. They didn't invest in their pips. They were falling really behind. And one operator said basically that he had to either take on a flag or he had to close his doors, and it had been his entire life's work and was something that he was going to pass on to his children and his grandchildren, but he didn't know if he could anymore because of that. So I think if there's anything that comes out of our conversation today, it's really understand the numbers very well, understand the market, right? And because this is really opening my mind to what's possible. I was just focused on the US for so long, and now you've opened my mind that there are other markets that are doing way better than what's happening here because they have the shackles of, the economic, holding the economy, holding them back, that's kind of been removed, and they're able to invest and grow. And
there are many Asian countries which are on this growth trajectory. Vietnam is one, Thailand is one which has already done it. Philippines, Sri Lanka is increasing with tourism right next to us. So just to add to what you said, I think it's look hard at what you're doing when you're entering the space, right? Evaluate, really step back and evaluate. Get the right advice, get the right expertise, get the right advice. Invest in that expertise to do this evaluation of concept, feasibility, return on capital, and then decide whether you're going to enter. That money and time would be very well spent. I'm hoping that more and more increasing number of entrepreneurs or business houses which want to get in across the world start doing more of this.
Exactly, because then that becomes the repeatable model. That becomes the scalable model.
This will also help reduce closure rates, right? It will help. The closures are just a huge, extensive loss to the local economy, in financials, if there are banks involved, it spins off into many dimensions which cause a lot of pain.
Talk to us about what you mentioned in terms of sweating the asset in our last conversation, and how that really also is another lever to drive further revenue.
If I look at restaurants, there's a bar concept. It's a chain, about 50, 60 bars, all social. Most of it is a co-working space from 10 to 6. And they sell co-working seats, there's space, there's an office buzz, and then it turns into a bar at night. Traditionally, for a bar, In India, most other traditional bars, you only get the dinner day part. And a lot of it is very weekend skewed. These guys have Monday to Friday co-working. They have a lunch crowd because of the amount of people who are there co-working. And then they have the evening crowd. So I'm not sweating the asset is like using your asset. I have seen it in the UK and some other countries, not that you are, but it's very limited abroad. This kind of, I think it's very segmented in the US, etc. They're co-working, and India's got all. It's got WeWork. It's got a lot of co-working companies, and co-working has really taken off since COVID. But myself, my office is WeWork. Well, WeWork, I think in the US didn't do well. In India, it's listed as someone who has the rights and is doing really well. And I think in terms of hotels, sweating the asset, well, Indian hotels are doing this, right? They're using their banquet and conference spaces in the day for fashion shows, book clubs, book launches, clothing launches, kind of places where they give the whole banquet all out, various designers come and set up, and there's, an exhibition or a sale going on. I don't really see them sweating the restaurant assets so far, I don't think, but I think there's an opportunity there. But for sure, the hotel, the kind of conference banqueting assets are being sweated. This is really true. I always call it sweat the asset when I was running even an Indian QSR. So I'm advising a gelato brand in India. It's called Frozen Fun. It's Indian brand, Italian gelato. We've put in with a coffee partner some really good coffee in about 6 stores. And that's to get a different crowd at the daytime, which, gelato is normally a post-dinner experience in India, except in the summer. So it's really, you can sweat the asset in various ways.
That's amazing. And again, that comes back to really understanding what the market wants. It's not a good idea to just guess and just put random. You have to do the research and understand what would be the highest leverage thing to, like lobbies I was mentioning before. Lobbies in hotels could be a great co-working space.
Coffee shops and hotels, right? All hotels are coffee shops. In India, they're 24 hours. In the US, may not be. They are not utilized.
Right.
They're utilized at breakfast and very sparingly at lunch and dinner. Why can't you convert them? But it goes back, you have to plan this. You have to design it. You can't just retrofit it. It's not easy. So you have to, or then you have to renovate, refurbish and design it so it works. Yeah, and again, you have to then check in the area, in the city, what's the demand? Is there a lot of co-working? Is there, some people would prefer premium co-working, which is in a hotel, right? Versus in one of the co-working companies. So that's
me. If there was a hotel, I think a friend of mine was showing me where they went to do some sort of meeting in Florida, and it was in this gorgeous hotel. If we had something like that nearby, and I'm in New York, okay, so the capital of business, if there was something that was as unique like that, where I could meet with clients or business partners, that would be next level. That would be incredible. And I don't think that there's enough utilization of that. This new work environment where people are working remotely and meeting in different locations, and that experiential side of things is a massive, massive opportunity, I think.
Yeah, I have a New York story. So I worked a summer job at the old World Trade Center, 1988. I was on the 110th floor. I was running the manager for the cafeteria there. So I love New York. I spent some time in New York then and while I was in the US. So it's one of my favorite cities.
It's quite the experience.
And luckily, New York is what I call New York is not America. New York is like an island which behaves very differently from the rest of the rest of the USA.
It's very true. It's very true. But it's all I really know. So I've been here forever. So I would love to know more from you. Like, what do you see as the future of hospitality? I think we touched on that a little bit with the rise of the unique destinations, but what are the biggest opportunities ahead? And we talked a lot about marketing before too. Like, how does marketing and positioning tie into all of that?
So yeah, as far as the future goes, I think there are a few aspects. We've talked about this experiences and offering unique experiences. Right. For a hotel, unique, it could include a culinary experience. I've done work with a client in Corbett, which is a game park 5 hours, which has bird walks and nature walks. And so you got to include relevant local experience. I think in the restaurant space, farm to fork will increase. There are only a couple of restaurants in India, honestly, probably doing it. I think there'll be a big opportunity in terms of what I call health foods. So there are a lot of startups doing protein bars, granola bars, healthy kind of nutrition based products, but I think it's very small right now in terms of little bit happening. I think there's a large opportunity. I think, this whole health-based foods, I think will increase significantly. I think, like we said, in hotels, I think the penetration into kind of tier 3 and 4. So for instance, in the last couple of years, the tier 3 and 4 cities have already accounting for 46% of new hotel signups in India. And of the total signing up and new properties, expand and announce in the next 3 years, 66% is Indian hotel chains, 34% is international. So, there is, so I think with, religious, spiritual kind of wellness, then religious, spiritual. There is this whole heritage, history, architecture, kind of going to old temples, that's a big opportunity in India. And as far as the restaurants go, I think experiential restaurants at the high end premium end. I think for QSR and coffee chains, there's still opportunity in 3 and 4, tier 3, tier 4 for the penetration. There's a little bit there. Another trend the last 5 years again is artisanal foods. This is, I'm talking about artisanal, authentic ice cream, gelato, cheese, energy bars, protein bars. So kind of artisanal, not only health, but artisanal just, could be artisanal indulgent, but artisanal in terms of natural ingredients and traceability of ingredients. So I think those are some of the trends that I foresee.
A lot of the foods that are apparently healthy are not. When you look at the ingredients, you're like, this says it's healthy, but it's not healthy at all. So it needs to be, I think the transparency in the brand. I was just on a panel on Monday talking about AI and how, back and forth about how AI is going to, take over the jobs and close businesses and all of that. And I was making the argument that when a company has a strong brand, it doesn't matter. Like the AI can't replace the strong brand, that personality, that, transparency that we're wanting and craving from, health food brands too, with their ingredients and how they're making the food, right? And sustainability. So I think that is a growing trend too, within whether it's within F&B or a hotel or any of that. The experiential side of things is that the market really, really is craving healthier, more spiritual experiences overall.
Yeah, I agree. I totally agree. That resonates with me and resonates with what I feel is the opportunity.
Amazing, amazing. Can you leave our audience with what you think is the number one biggest mistake hospitality investors make today, and how could they avoid that?
So one is, I think, what often happens both in hotels and restaurants is investors or new people getting into the business follow trends. They follow what's trending in terms of a city, in terms of a location, in terms of a format, segment, and blindly follow the trend without actually doing the research.
Right. In terms of also, you mentioned before influencer marketing too, like that's another trend as well.
So, I think adequate research on the viability of the concept, the feasibility, which would include both the demand, supply side and cost, capex, capital, and the cost is very important. And I think that's one of the biggest mistakes that people make. Another big mistake, the problem in India is inadequate focus on project execution. Leads to both cost delays, cost increases, time delays, and sometimes quality issues. So not, adequate focus on, even if you have the best of designs, right? And the most cutting edge design, if it's not followed up, executed and implemented properly, you will have, capex increases, you will have delays in the project opening. And yeah, I think, we didn't talk about earlier, you talked about influencer. Yeah, as I guess everywhere in the world, this influencer marketing, it's a well in which you can keep pouring dollars. I think it's still, in India, at least across brands, segments, it's still, people are still learning the hard way of spending money and not getting a return. And it's not. So there are influencers, but I think the influencers who work in India are the expensive ones, the well-known sports people, the cricketers. What works in India in terms of influencers is cricket and Bollywood, equivalent of Hollywood, actors and actresses. Here at the top end, it's very expensive. So only big brands can afford them. They work. Them endorsing a brand works. It helps against ROI. This whole new industry of, kind of everyone who becomes a food influencer, restaurant influencer, hotel influencer it's the dangerous part. It's not that expensive. So it's tempting to do. And often you do a bunch and then you, what the hell happened?
There's no ROI. Right.
No new customers in the hotel, no occupancy change. I got no new customers in my restaurant. And, even though the reel that was posted on Instagram got a lot of views, but it didn't lead to any. So I think, kind of tempering influencer marketing, doing it only very selectively, relevantly. And there are still in India influencers who are not paid influencers or genuine, experts in the industry, and people follow what they say when they talk about restaurants or when they talk about hotels, So it's that. And then it's actually doing, I think in India, I see a lot of brands going back, and I advise brands to do offline marketing, or to keep us a reasonable budget for offline initiatives, local initiatives in, the area and the city that you operate in, and not online, not only this kind of obsession with online.
In terms of the CapEx, making sure that CapEx is spent strategically, what would be the ideal way that an investor should manage manage that?
I think you have to hire, they're good project management companies in India. Most of the big real estate PM, companies, international ones which are here in India, and they are specialized. So you must work with the project management company. That fee that is paid is well worth. It's a return, you get a return on that. So the only way to do it for a mid to large size project is with a PMC. If you're a small or in early stage company doing one, then you have to invest in recruiting a project management talent, like a site engineer, someone who can actually do it in-house. But either way, you need expertise. Depending on the project, you need an engineer who understands drawings, who understands materials, who can question it, check it. So you need someone who understands the parameters involved.
Right. It sounds like you're saying like the overall team needs to be very strategic and efficient for marketing, for consultancy, just to know that the market demand is there, design and all those different aspects. Having the right ROI team, the right ROI advisory is the highest leverage point for biggest return on investment.
Yeah, that's correct.
Amazing. Amazing. Samir, thank you so much for all your insights. This was so much fun understanding what is going on in your market and getting a fresh, unique perspective. If our audience wants to learn more about you and connect, how can they do that?
Best connect on LinkedIn, SAMIRKUCKREJA. You find me on LinkedIn. I'm very active and responsive on LinkedIn. So best way to connect with me, I think, would be on LinkedIn. Okay. I'll also leave the website of my company, www.T for Tom, A for Apple, S for Sam, A for Apple, N for New, A for Apple, Y for Yellow, tasanaya.com.
Amazing. We'll put it in the show notes. Thank you so much, Samir.
Thank you. Thank you. Bye-bye.